You know that feeling when you check your silver stack and see those shiny bars and coins, and part of you wonders if now's the time to cash out? I've been getting that feeling lately, and I know a lot of you have too. The market's been wild, prices are fluctuating, and everywhere you look, someone's either screaming to hold or telling you to sell everything. But here's what I've decided after weeks of analysis, sleepless nights, and really digging into the fundamentals. I'm not selling my silver, at least not yet. And before you click away thinking this is just another generic hold forever video, stick with me, because I'm going to break down exactly why I'm holding, what specific signals I'm watching for, and most importantly, when I will actually consider selling. This isn't about blind faith or silver bug mentality. This is about strategy, timing, and understanding what's really happening in the precious metals market right now. Let me start by addressing the elephant in the room. Yes, silver has had some impressive runs lately. Yes, if you bought at the right time, you might be sitting on some decent gains. And yes, the temptation to lock in those profits is real. I get it. I've been there, staring at my portfolio, doing the mental math of what I could do with that cash right now. But here's the thing that keeps me holding, and it's something that most people aren't talking about. We're not just in a normal market cycle anymore. The fundamentals that drive silver demand have shifted dramatically, and I mean structurally shifted in ways we haven't seen in decades. The industrial demand for silver, particularly in solar panels, electric vehicles, and electronics, isn't just growing, it's accelerating at a pace that's actually outstripping new supply. We're talking about a metal that's simultaneously a monetary asset and an irreplaceable industrial commodity. And that dual nature is creating a supply crunch that most analysts are still underestimating. Now, let's talk about the supply side, because this is where things get really interesting. Silver mining isn't like flipping a switch. You can't just decide to produce more silver when prices go up. Most silver, about 70% of it, comes as a byproduct of mining other metals like copper, lead, and zinc. That means silver production is tied to the economics of these other metals, not to silver's own price. We've seen underinvestment in new mining projects for years. The lead time to bring a new mine online is anywhere from 7 to 10 years. And we're now facing the consequences of decisions made back when silver was trading below $15 an ounce. Nobody wanted to invest in new capacity then, and now we're seeing the supply constraints playing out in real time. Add to that the fact that existing mines are depleting, or grades are declining, and geopolitical tensions are affecting mining operations in key producing countries, and you start to see why the supply picture is so tight. But it's not just about supply and demand in the traditional sense. What really has me holding is the monetary aspect, and this is where things get a bit uncomfortable to talk about, because it involves the financial system itself. Look, I'm not a doom and gloomer. I'm not saying the world is ending, but you'd have to be willfully ignorant to not see the cracks forming. Central banks have been on an unprecedented gold buying spree, and while silver doesn't get the same attention, it historically moves in tandem with gold, just with more volatility. The debt levels globally are beyond comprehension at this point. We're talking about numbers so large they've lost meaning to most people. When you have governments drowning in debt, currencies being debased through endless money printing, and inflation that's proving far stickier than anyone wanted to admit, precious metals start looking less like speculative plays and more like essential portfolio insurance. Here's what I'm watching closely, though, because I'm not going to hold forever just on principle. There are specific indicators that will tell me when it's time to take profits. First, the gold to silver ratio. Historically, this ratio has averaged somewhere around 50 to 1, meaning it takes 50 ounces of silver to buy 1 ounce of gold. Right now, we're still way above that historical average, which tells me silver is undervalued relative to gold. When that ratio starts compressing significantly, that's when I'll know silver has had its major run, and it might be time to take some chips off the table. Second, I'm watching industrial demand signals. If we start seeing a real economic slowdown that actually impacts solar installations, EV production, and tech manufacturing, that could ease the supply crunch temporarily. Third, and this is crucial, I'm watching the paper market versus physical market dynamics. When premiums on physical silver collapse, when you can buy coins and bars at spot price with no wait times, that'll tell me the retail demand surge has cooled off. The other factor keeping me in is simply the asymmetric risk-reward profile. Think about it this way. What's my downside if I hold and silver drops? Well, it's got a floor because of industrial demand. Silver isn't going to $10 an ounce. The cost of production alone prevents that. But what's the upside? If we see the kind of supply squeeze that some analysts are predicting, combined with continued monetary debasement and a potential rush into precious metals by institutional investors who've largely ignored silver, we could see prices that make current levels look quaint. I'm not saying we're guaranteed to hit $50 or $100 an ounce, but the potential is there in a way that the downside risk just isn't. That's what asymmetric means. Limited downside, substantial upside. Now, I want to be clear about something. I'm not saying you should follow my strategy blindly. Everyone's situation is different. If you bought silver at $30 an ounce, and it's now at $32, and you need that money for an emergency fund or to pay off high interest debt, then selling makes total sense. This isn't a cult, and silver isn't a religion. It's a financial asset, and it needs to serve your personal financial goals. What I am saying is that for me, given where we are in the economic cycle, given the supply-demand dynamics, and given my personal financial situation where I don't need this capital immediately, holding makes more strategic sense than selling. I'm treating my silver position as long-term wealth preservation with upside potential, not as a short-term trade. There's also the diversification angle that people don't talk about enough. Silver represents something unique in a portfolio. It's not correlated with stocks. It's not real estate. It's not even perfectly correlated with gold. It's its own beast. And having that non-correlated asset in your portfolio provides genuine diversification benefits, especially during times of financial stress. We saw this during the early pandemic when everything crashed. Precious metals provided a cushion and then recovered strongly. That portfolio behavior, that ability to zig when everything else zags, has real value that goes beyond just the spot price. So here's my bottom line, and I want you to hear this clearly. I'm not selling my silver yet because the fundamental case for holding remains intact and arguably is getting stronger. The supply-demand imbalance is real. The monetary environment remains supportive. The industrial demand tailwinds are powerful and long-lasting. But I'm also not a mindless holder. I have clear exit criteria. I'm watching specific indicators, and when those indicators tell me the easy money has been made, I'll reassess. Until then, my silver stays exactly where it is, stacked safely and waiting for its moment. If you're holding silver too, I'd love to hear your strategy in the comments. What are you watching? What would make you sell? Let's have a real conversation about this because we're all in this together, trying to navigate these crazy markets and protect our wealth. Thanks for watching, and I'll see you in the next on.